Hi everyone, I hope you're all doing well, and today we're going to be covering the free stocks to buy in July 2020, and this is where I cover the free stocks I'm most likely going to buy on the US stock market in the month of July. Now before we get into the video, make sure you smash that like button so it gets out there on the YouTube algorithm. But we're going to start off with kind of like just recapping what my kind of thought process is. So in general with the US stocks, I'm looking and thinking a lot of them are pretty much at fair value, a lot are pushing overvalued territory as well. You just look at the S&P P ratio and you see how high it is, and when you consider the debt damage and a lot of companies are trading at 52-week highs, it's a bit hard to find a bargain out there. So I'm not really going to be buying that many companies in the month of July. I'm still building up that cash pile at the moment, waiting for the opportunities to buy stocks when they do pull back. And I think when you look at the risk of the second wave potential, I think there might be some opportunities at some point. We're seeing some weakness in the markets, for example, as well. So I'm generally waiting for a lot of opportunities to come up now because I feel like I bought heavy in the dip and I'm kind of just building that cash pile back up. But these are three opportunities that I am looking at right now in the month of July. So number one is Facebook, and obviously this is kind of like my favorite stock on the stock market. It's been my favorite stock for about the last year-ish. It used to be Microsoft for a very long time, but it's just recently changed to Facebook because it has a little bit more growth potential compared to the valuation as well. It has a bit of a cheaper valuation on it, and it's a stock that's just always been hated. Like, there's always been negative press about it, and right now that's going on with Facebook because of the boycott on adverts and companies that are advertising. Now a lot of these companies are doing it for PR, in my opinion, are doing it for PR to like go, look, we're boycotting Facebook, come and spend with us, look, we're a good company. But realistically, a lot of these companies are having to pull the marketing budget, so it just ties in nicely of like good PR to get out there saying, look, we're boycotting Facebook, but realistically they probably weren't posting any adverts anyway because of the COVID-19, having to save some money, and they're pulling that from the marketing, so that's kind of ties in nicely for them. Now for me, this is a company that I would buy anywhere probably between, well, I would ideally look at $170, maybe even $180. So when it got up to $240, it was definitely overextended for me. Obviously we pulled back as recording this video into like the 210s. So if it does drop a little bit more, it'll be a little bit more attractive prices for me. But even so, it's still at decent prices right now. If you're going to hold it for 5 years, just if you got a good position, you don't have to rush into it as much as what you would have had to done if you weren't in the stock market for a long time and you weren't able to buy at them cheap prices. Because I bought this on a lot of dips, I'm okay not to rush into it. But like I say, over a 5-year course, like I do believe that Facebook will be even higher than these prices. Now when you look at the P ratio, it is 29 right now, but pre-COVID-19 this was like a company that was a 22 P ratio, and when you compare that to similar companies like with the growth and balance sheet, you were talking a P of like maybe 35, 40, maybe like even higher towards 50. And to have this growth and balance sheet that this company has, and to be trading at that sort of ratio, it was absolutely crazy for this sort of company. You look at the growth's absolutely fantastic. Revenue is set to explode, earnings is set to explode. As more and more advertisers come on the platform, it'll be able to charge a lot more money for the adverts that it places on its advert. The balance sheet is absolutely amazing. I mean, the equity just keeps going up. It's managed to keep its debt just at zero, so it's just having cash, and it's like gives it opportunities to do that cash. It's sitting on 60 billion cash right now, which is absolutely phenomenal. And with this company, you get Facebook, Instagram, WhatsApp, Messenger, and a lot of these platforms can be pushed a little bit more for like monetization. They've also looking at going into other areas, so they've got a team that works on other projects. It's just started looking at doing Facebook Shop, which allows sellers to sell on there. Be a little bit more competition to like Spotify. So Facebook for me, with its advertising side and the other areas that I'm sure it will go into eventually, and as them adverts go up in pricing, I think it'll just do phenomenal. And for me, it's the easiest money right now in the stock market, and like I say, I'm waiting for it to be a little bit cheaper than what it is right now, but I can afford to wait because of the position that I have built up on dips. If you were kind of like rushing into it, sure, you could probably buy at these prices, and like I say, in 5 years time, I do expect it to be a lot higher than this, so it just goes down to your personal preference in my opinion. And number 2 is Tesla, ticker symbol TSLA, and as you know, this is a company that I held and made 250% on, but I'm always looking for the opportunity to go back into this company because I do really like it. I just think it's at like crazy overvalued prices. Like realistically, this company should be a $500 stock. and that's where I'd be willing to pay for this company. Anything else, it's definitely overvalued, but you know, it does trade at a premium because of the growth that it does currently have. When you look at the growth, you can see the, you know, how much the revenue is going to explode going forward, the earnings are going to explode going forward, and they're just so far ahead of the game. You look at the mileage range on this company and it's fantastic. I mean, even the cars, you know, the good looking cars, and most electric cars are quite ugly things, you know. They're not attractive cars, and you know, Tesla were the ones that made electric cars a good looking car and a good car to drive, and you know, wasn't a car that you had to charge up every 100 miles. And obviously with the expansion of the gigafactories, the one in Berlin that it's looking at, and then potentially even more going forward, that's obviously going to help production a lot more. Obviously the Model 3 has been a massive hit, but down the line you're probably looking at what the Cybertruck's going to do, what the semi-truck's going to do, what the Roadster could potentially do, and I'm sure there's potential for like another model to come in at some point over the next 2 years. Maybe the potential for a smaller car. Even the Model X I think is a pretty good looking car overall, and just the technology is so far ahead, and we're just talking about the cars here. And the technology on the cars with the batteries is just so far advanced to what everything is out there. I think last time I checked, they're 3 years ahead of everyone else right now. And that's not without getting on to everything else, like the solar side of the company as well. I mean, Tesla for me is a company that is, for a 5-year hold, would be an absolutely steal of a company if you get it at the right price. And I always kick myself because I look back at the chart and I look at where it was at back in them lows, and it was dipping down to $400, and myself, I was just kind of buying everything, and I was like, you know what, I can wait for Tesla to maybe go a little bit lower than this. I thought, you know what, I'll wait for it to the 300 range and then I'll buy it, and I didn't buy on the dip because it never went to 300, and I should have bought it, and it was a bit of a mistake from me, but I've been in the game long enough to now to know that there's going to be other opportunities where I buy this stock, and it's just not about getting FOMO'd, it's waiting for the right opportunity, and there's no point overpaying for a company. And that's what I'll do with Tesla. But if the opportunity does come, it is my number one target in the stock market right now. And my last one is Revolve. And I started buying this last month. And it's a company that I am willing to buy a little bit more of. Probably not anytime soon. I'm going to build that cash up, see if the stock market dips. But if there isn't a dip in the stock market, I'll probably add into this position. Unless it does go down, a huge amount, then potentially I will buy a little bit more of this stock. Basically, it's a fashion company. It uses a lot of technology to assess which brands are coming up, and then it's able to stock them brands and sell that item that is in trend. So it uses this through a lot of technology. It uses influencers to promote its products through like Instagram. It's looking at making marketing in as well as Instagram influencers, as looking at TikTok as well. So it's kind of like ahead of the game. It reminds me a lot of Boohoo, which I made a lot of money on in the start of the year. And when you look at the stock chart, you can see that it hasn't been on the stock market that long. It's been on the stock market for about a year. And I do like buying like companies that have been on the stock market, the IPO, they shoot up on like the first week, and then eventually they sell off because you get all them insiders that start selling that are now able to sell the shares. And then eventually they go down to some cheap prices, and you can pick some decent little companies that have just come up on the stock market a couple of months after that they've gone on, and they've pretty much come down to cheap prices. And I look back at March, and maybe I could have bought then, but even so, when it's trading around the $15 to $14, it's still a pretty cheap company because it has a lot of potential to go up, I would say 100% from here. You look at the IPO, it was at $33, it went all the way up to $46. And like I say, anything around $14, $15 is a pretty cheap price, in my opinion, for this company. Now, pre-COVID-19, this was a company that was having a forward P of around about the 22 range. And when I get onto the growth, that's a very cheap forward P for a growth company. When we look at the growth, you can see that the company is just starting to make a lot of profit, which is absolutely great. You also look at the revenue forecast, and revenue is set to grow absolutely huge as well. It's about a 20% revenue growth company. So the growth on this one's fantastic as well. And it's got a history as well of being a pretty decent company at growing that. The balance sheet is pretty good. It's just took 30 million on just to help it through COVID-19, but previously to that, it was also a clean balance sheet, which is fantastic. Even so, with that 30 million on the balance sheet now, it's still a pretty decent balance sheet. It's got 100 million in cash, 30 million in debt. So I would hope that it would be able to pay that debt back after this has all gone through and the company's come out on the other side of it, which would be great. And during the COVID-19, we had the co-CEO buying shares as well, and we also had a member of the board buying shares, and they actually bought quite heavy. They bought 2.5 million shares, which is a fantastic sign. Obviously, I'm a big fan of insiders buying shares when the stock has gone down, which they did do. So that's another great sign with this company. So guys, there's the 3 stocks I'm looking to buy in July 2020. Let me know what 3 stocks you're looking at down in the comment section below. And as always, smash that like button, subscribe if you haven't, and I'll see you in the next video.